All right, everyone. Good morning and happy Monday the 13th. All right, so I've got a weekly chart here of the QQQ futures, otherwise known as the NQ. I think one of the most important concepts as a trader to always keep in mind. I think, for me at least, a lot of my approach to trading is kind of built on this one idea: the concept of reversion to the mean. The R, the T, and the M. So for me, the mean, right, home base, the average price, that's our 21 EMA, the white moving average. So the concept of reversion to the mean, that just means the market is pretty much a series of moves away from that 21 EMA and then back to it. All right, so back here in late 2023, we're in more of a downtrending market. And for the most part, what do? Right, we flush away from that 21 EMA, pull back to it. We flush away from that 21 EMA, and we pop back into it, away from it, back into it. Then eventually the structure changes, 21 back above the 50, momentum turn. Everything leans a bit more bullish. Now what do? All right, we move away from the 21, we pull back to it. Right, little chop, brand new squeeze, push away from the 21, pull back to it, away from it, back to it, away from it, and back to it. Now on a 1 minute, 3 minute, 5 minute time frame, that reversion to the mean, that pretty much takes place every day, left and right. When that reversion to the mean takes place on, could be a 4-hour chart, could be a daily chart, or in this case, a weekly chart. The bigger the time frame, the uglier it feels. At the moment, though, all we've got so far is a pullback to our weekly 21. So now the question is, where do we go from here? Is it, an opportunity like back here where you push, you chop sideways, flush down to the 21, right? Little back and forth. They're back above it, and then boom, they go and kick off another leg to the upside. Could it be a situation like that, or could it be a case where, we're getting a big weekly close under that 21 EMA? Bulls can't quite get it back above, and they flush it further. Fun part is we'll find out together. But looking at it at the moment, we have a 12 out of 15 on the scoreboard. So, not perfectly bullish, but pretty bullish. Trend is still bullish. The structure is still bullish, and little negative momentum turn. Right, without having a conversation in terms of, okay, where do we go from here? All right, do we buy it? Do we short it? At the moment, it's a pullback after a push to that 21 EMA in the context of, for the moment, a pretty bullish weekly chart. All right, now, none of that means I'm jumping in buying a bunch of calls this morning. But, for one, if I'm short, say I'm short back here, I'm catching the flush, maybe they break it lower. But if anything, that first kickback to that 21 EMA, I'm maybe taking a few chips off the table. Imagine I got short all the way up here, and you're doing that with a QQQ put. Right? You got your QQQ puts, catch a flush down to support. For conversation's sake, maybe you made $5,000 on those puts. My thinking at that 21 EMA would be, all right, I'm going to take the profit. I'm going to pocket the 5K. And then maybe I can take, $500 of it, maybe $1,000 of it, and then go buy a cheaper, further out the money put. Then you're in a pretty good spot either which way. They hold it here, we rally, and boom, we're at brand new all-time highs. You're going to have a net profit of, $4,000 or $4,500. So lock and roll your profit. You got 5 contracts, maybe sell 4 of them. Initial thinking being, if the bulls are going to try to fight, this should be the biggest spot they try to fight at. If you look at the cash market, if we do get a weekly close below that 21 EMA, it's a pretty big dynamic in the short term. Maybe not the end of the bull market, maybe not the end of the world, so to say. But, basic rules. You close under your 21 EMA, can all open the door for a flush down to the 50. Now, the S&Ps here, we've been above the weekly 21 EMA since October of 2023. So not October from a few months ago, but October from 23. Right? And there's that concept of reversion to the mean. You push in, you pull back to it. You push in, pull back to it, push in over and over again. Right? And again, without having a conversation about where do we go from here, What I know from experience is every time we're doing that, that every time that weekly chart pulls back to a 21 EMA, in the short term, it all feels pretty ugly. 15-minute charts are getting torn apart. You've got 30-minute sell signals. Point I'm trying to make is, if the bulls are going to fight for a bottom anytime soon, that's pretty much the first spot I think you're looking at. So QQQ 500, S&P's 5,800. And if we're here next Monday with a big weekly close below that, different conversation to be had. All right, but looking at the sheet here, and let me jump over here for us. All right, so going into last week's open, Monday morning of last week, we had the indexes at 15% of max strength. The Big Ten at 48% of max strength. The sectors at 12%, and then the combination of 23% of max strength. Right now, it's not a bear market. Like, well, I got to wake up and I've just got to short, the crap out of everything. But it's also not, all right, I'm waking up and I'm buying everything. 23% is just eh. All right, it leans a little bit bullish, but it's just pretty neutral. Going into today's open, right, so as of Friday's close, the sectors go from positive 12 to negative 17%. Big Ten goes from 48% to 18%. So still positive, but a little bit worse. Indexes go from positive 15% to negative 35%. Total score drops from 23% to negative 10% of max strength. All right, so we're very far from the kind of market where, all right, I'm running the scan, I'm looking for entries, and I'm just, putting cash to work, buying calls left and right. But, to be fair at the same time, if we can hold the weekly 21 EMA, negative 10% is also not, I got to go and short, Amazon and Apple, and I got to get super aggressive here to the short side. Yeah, bears have got a little short-term edge, but at the moment, not in a fashion where, they've completely taken control of the market. And then back here on the main screen, red is bearish, of course, blue is neutral, green is bullish. So if we kind of divide things from bigger time frames down to lower time frames, I think it tells a little bit more of the story. Where the indexes, right? Look at a weekly chart down to a 2-day time frame. All right, and for any given time frame, the strongest possible score is 15. All right, so QQQ's got the perfect weekly as of Friday's close. S&P's at a 12 out of 15, so that's pretty bullish. Dow Jones a 6, IWM a 4. QQQ S&P's a little better, but at the moment, no huge issues here on the weekly. 3-day time frames, a little neutral. 2-day time frames, a little neutral. For the most part, bigger time frames, they lean bullishly neutral, we'll call it. Then we go looking at a daily chart down to a 30-minute. There's your shorter term time frames. They all tell a different story. 30-minute QQQ, negative 15, right? The worst score possible. Every 30-minute chart gets a negative 15. Almost every hourly chart gets a negative 15. So as a swing trader, that's the battle I face right now. If I look at a QQQ, that weekly chart, I want to buy that pullback to support. I want to buy anything pulling back to a 21 EMA with a perfect score of 15. When can I buy that pullback with a perfect score of 15? When I can look down the ladder and my 30-minute, 15-minute, hourly, when they don't look like crap. Weekly chart might be perfect. Weekly chart might be at support. If they keep hammering on lower time frame sell signals, they might crack it, take the market lower. So the picture I'm looking to change, if I do want to jump in and get long, improvement down here. 15-minute goes from negative 15 to a 0. There's progress. Hourly goes from negative to positive. If they can't do that, they can keep on chipping away at weekly support, then go on to cause bigger problems. But in a nutshell, there's your market. On the pullback, they haven't killed the S&P's weekly, QQQ. You could argue Dow Jones, IWM, and then look down here at the Big Ten names. They've all, for the most part, got pretty good looking, weekly, 3-day, 2-day charts. Meta really good. TSM's perfect across the board. Google perfect. Broadcom. And then a couple down here on a 2 hour to a 30. This is our heat map basically based on that scoring system. I'm gonna have my best trades getting long. Make the most money, put on the most cash. When I'm looking up here and it's just nothing but green. Yeah, bigger time frames, lower time frames, everything bullish. Everything down here is green. Looking down here at the sectors, they're all green. We're visually in much more of a mixed match market. Yeah. Some bigger time frames, bullish and neutral. Some lower time frames, bearish. In the short term, I think calls for a lot of patience. So that is that. And then checking the overall rankings here. Now, if the market can't find support, at that weekly 21 EMA, I don't think quote unquote relative strength matters. If we do hold here, and now, just for conversation's sake, let's just say we found a bottom today. What am I not going to be in a big rush to go and buy? Something like an AMD. Well, I don't like AMD. With the market looking a little iffy. So if the market shows a couple signs of improvement, I don't think it's going to fix AMD quickly. In comparison to a Google, right at the buy zone and a really clean daily squeeze. But again, if the S&Ps are breaking 5,800, QQQ breaking 500, I don't think you want to be long Google. The market can find a bottom and catch a bid here. And I'm not talking, the S&Ps and Qs are at brand new all-time highs by Friday. But if they can put in a bottom and just chop, a little back and forth, try to, stabilize everything, that might be big enough of a green light for a name like a Google to go on and do what I think all by itself it wants to do, which is take that daily squeeze, break it out, kick off a rip into 204, 205. If they can hold the market up, I think it can do it. If the market can really rip and squeeze out the shorts, then I think a better chance Google can do it. Market keeps on rolling over, then I don't like the odds there. But few things showing a little relative strength. Meta, Gold, EOG, Walmart, TSM, Suncor, Net, MP, Citigroup, and the Google. The three I would give you would be Google, TSM, and then Meta. And not to be a broken record, but when can I go and buy Google? It could be at the open. It could be later today, tomorrow, any day this week. When I get some kind of buy trigger on the QQQ. All right, here comes Google, but then I pull up the QQQ, and we're down there at 500. We've got a 2 hour, 1 hour, 30-minute, 15-minute sell signal. None of that points towards go on ahead and buy some tech stocks. I don't need QQQ back at 540, although it'd be pretty cool. Can the QQQ just give me signs of, all right, I hit my key level. I'm going to hold up here. Everything's taking a breather. And then maybe I'm looking at a Google, but not until then. So Google, I like in that brand new daily squeeze. And then a couple more things to keep in mind. Markets at important levels. And then tomorrow, we got the CPI report. The following day, we have the PPI report. We have monthly expiration on Friday. We have another day off on Monday. So markets close on Monday for MLK Day. And then there's also the inauguration. And then about a week or 2 weeks down the road, you sprinkle in some earnings. We got a lot going on. But yeah, Google. I want to buy that daily squeeze. I want to buy it with size if I get a better market behind it. If I don't, I probably don't do anything, with that daily squeeze. Next up would be the Meta. And Meta here, you have a 3-day and a daily squeeze. With earnings coming up on the 29th. So what's that? It's like, 13 days? If you are going to swing trade, just check earnings. That's all. But in a better market, I'd be looking at the 3-day squeeze, thinking, all right, well, we got good trend. We got good trend. We have good structure. If it can get the MACD back above zero, and then we get momentum, I'd look for a breakout. Look for a move into. At the moment, we look for a move into about 670-ish. But can Meta really be a honey badger, needle in the haystack kind of name, and do that without a decent market behind it? Of course, it could. They're going to do what they want, but the edge, the odds of working in your favor are so much stronger in the better market. So keep an eye on it, but patience. And then number 3 here, with earnings coming up on Thursday morning, would be TSM. Gapping down to about 201, 202. And of course, with earnings, it can be a total coin flip. So take it all with a grain of salt here. But it has a little bit of that Broadcom vibe to it, where Broadcom goes into earnings with a 2-day squeeze, a 3-day squeeze, and I want to say, I think it had a perfect weekly. Weekly slingshot, and then off she goes. Again, earnings is a total coin flip. But point I'm trying to make is, before earnings, if you look at the 3-day squeeze, not in a great market, but 3-day squeeze alone here, at the moment, I think we want to take price into 230, maybe a little higher. Trend, structure, momentum, squeeze, perfect 15. It is the A plus setup. So they get through with earnings on, I think it's Thursday morning. Yeah, so they come out with earnings on Thursday morning, and for conversation's sake, if they gap it up, that might be enough of a nudge here. Give TSM a little oomph. Try to go on and fire that 3-day squeeze. I know earnings are not a 3. If TSM can push through here, a good close above that 220-ish, they probably trigger that squeeze to fire long. So earnings could be a situation where, they just kind of accelerate the move that TSM already wants to go on ahead and make. Could also be a case where they gap it down to a $1.60, and they've ruined all the fun there. So keep an eye on it. I like it. But I think before, a TSM entry, a Google entry, a Meta entry, you got to have something to work with on the indexes. Could be a 5-minute buy signal, could be a 15-minute, but something where you can point at the chart and say, all right, based on this one or two things, thinking the bulls might have found a bottom here. Then you can anchor to that one or two things. Should they disappear, you cut bait and you're moving on. But all right, y'all, that is the bulk of what I got for you this morning. And then we go grab our trade sheet here. And let's go see what we're rocking within the room. So we closed a couple last week, and then we got one open. Now, I'm sure a lot of you have noticed, but one thing I've definitely noticed, even on the better or the best setups, no follow through, no actual breakout, no continuation, no follow through. If you catch a push to the upside, if you're not quick to take it, I've seen like 5, 10 different instances where you buy it on a Monday, your calls are up 80% on Tuesday, and then you're in the hole on Wednesday. But all right, back on Monday, we closed profits on TSM for 63% on the options. We took profit on OKLO for 14% on the equity. Now, both of those being two good examples. We got the TSM called debit spread. You got the 3-day squeeze, daily squeeze. They break it out, big push. Here comes 250. We're taking profit at 220. And then what? 2 candles later, right back into that range. Right? And they don't crush TSM. They don't break structure. It still looks really bullish. But to try to call for continuation in a market not offering continuation, Not the easiest game to play. So that worked out. And then for OKLO, same situation here. Buying it down here. Nice push, breaks out. We're taking profit at 28. And then a couple of days later, right back where you came from. So 2 profitable trades there. And then at the moment, we're long the Bitcoin futures, which I'm going to go out on a limb and say the trade won't work. They want to prove me wrong. I am more than all right with that. But we're buying it back up here on the couple closes back above the 21. Um, good reminder, when you don't have the wind at your back from the indexes, again, trying to buy something and call for a breakout, call for a follow through, you'll get it in a few spots, but it's just so much harder. So for my Bitcoin trade, I got the exit down here at 89K. And yeah, from here they break it lower, they shall stop me out. They don't want to do that, and they pop it. I would buy a little more with couple. I'd buy more if they get 2 closes back above that 21 EMA, but then they have to get that momentum turn. So I put in my journal one mistake I think I made here on the entry, and I should know better because I've seen this pattern, hundreds of times. Right, they'll get that momentum break, momentum walking lower, then they'll get a good pop going. Off the bottom, big rip, up 2, 3, 4, 5, 10%. They're taking price higher with momentum below zero. Now, if they can hold that 21 EMA and chop it, eventually they'll turn it. Then you get your push. But a lot of times they'll pop it, pop it, pop it. It can make for a bit more of a trap. And I do feel a little trapped here. All right, pop it, pop it, pop it. No momentum turn. So that pop you're buying into can quickly run out of steam. And then you're pulling back into no momentum. You're buying a dip back here. You're sitting through a dip back here. Momentum, structure, it's all a little bit better. But I'll definitely keep that in mind for the next entry. Don't want to do that too many times. But all right, my friends, any questions for me, any chart requests, I've got you covered here. And then the folks in my room, I will see you over there, kick you off for the open. And then I got to record a quick video this morning, and then you should be getting emails of the indicator updates sometime later today. So that is all of that. And then out of curiosity, the 3 names that I like here, where are they going to open? TSM down to 202-ish. Good pop off that 21 for TSM back on Friday. And now you're going right back into it. So not in a great market for, all right, I'm going to buy it and call for more and more and more. Google going to open, I believe, around 190, 191-ish. Overall, pretty quiet on Friday. And then Meta, a little here, there, and everywhere for Meta back on Friday. They break 600. They pop it back towards the highs, and they finish up with a close pretty much in the dead middle. That one going to open around $5 or so lower, around 610. So I like them as far as relative strength wise. Can't be buying them just yet. But all right, let me get going through the chat here. And yeah, two biggest things in my opinion is S&P's 5,800 and then QQQ 500. And like I mentioned, if you have caught the short down to that level, some way, shape, or form, I would find a way to pay myself. And you can pay yourself and keep a couple of chips on the table. But what I wouldn't want to do is, I'm short on the Qs, I'm catching the flush, down here, or the S&Ps rather, short in the S&Ps, catching that flush, and then down here at that 21 EMA, I hold on to my trade, I buy more, and then my $10,000 of open profit turns into to a losing trade if we hold here, bounce, and get a huge reversal. I'm not saying we are going to, but it's a lot like being long into a major target or major resistance. Right? They might have more in the tank here, but maybe I'll take a couple chips off, roll out some profit. Make sure if we find a top up here, I'm keeping a bulk of the profit I made on the easy move. Could be a chance potentially. The flush from the high down to that 21 in the short term at least might be the easier part of that short. We gonna find out though. Hey, good morning, Ben. You got a 57.70, 57.90, 58.10 butterfly that expires on Friday. I was thinking about closing it if price is at 57.90. Okay, so you got to put butterfly with a center strike right below that 5800, 57. Okay, it expires today. All right, so you got a center strike at 57.90. You're $20 wide. It's a tough call on that one, I think, to be honest. Oh no, that could work out beautifully, of course, if we come down to 58 and we generally just pin around that level. Being that you're $20 wide. But then in terms of a bigger directional move, that could be support. We'll find out. Maybe anybody getting short at the open, anybody short into the open. If the market's trying to find a bid here, they're taking on a little heat, little short squeezy action, or the opposite could be true. Below that 5800 could open up the floodgates for an even bigger flush. What I would watch here at the open is, how does price behave either near or below that 58? And then I keep a big focus on the internals this morning. I'm going to imagine ticks in the advanced decline. They're probably going to open down to the negative reading. So it could be a case where the ticks advanced decline out the gate, really ugly, getting hammered. But then first 2, 3, 4, 5 minutes in, all the pressure kind of eases up. We'll see the opposite of that. Ticks open up at plus 1500. QQQ gapping up, S&P's gapping up. And the bulls have kind of shot their load at the open. Usually ticks won't hang out at plus 1500 all morning, all day. So it all works down a bit. Everything just simmers off a touch. You can get that on a gap down, especially near a key level. But if the opposite were true, the internals open bearish and they just keep on pounding them lower, might be a sign that, that break at 58 leads to a bigger flush. If you're 20 wide, if they can keep it anywhere in that 50, let me see, 5780-ish, 5790 neighborhood, maybe give that a couple minutes to try to play out. You put a gun to my head. I think we bounce here, but I'm not going to be buying calls this morning because I could be dead wrong. But I always try to think in terms of not to be vulgar, but who could the market F up the most today? And I always get a little interested when we get these, emotional moves, whether it be a big emotional, rip high or a big pullback. It's always interesting when we get these big emotional moves to a key level. The action when we finally get there, because a lot of times when we finally get there, you've pushed a lot of folks to the brink of, patience and discipline. All right, I'm not going to short the bull market. I'm not going to short the bull market. My God, they keep on pulling back. I'm not going to short the bull market. And if you can finally push into that breaking point, if everybody's looking for a crash, we don't usually get it. I think calling for a bounce all the way up here, in the chop is a little harder for it. But yeah, it's more of a spectator today. I'm very interested. Reason being, I've been the guy who, I've been the dude who will wake up today with a nice chunky profit on my puts and not book them at support, not take them off. And then tomorrow I'm sitting there thinking, damn it, I can't believe I gave back all that profit at support. So over time, I try to become much more of a trader where, all right, I'm short. We're at support now. Let me pay myself. If I'm up 5,000 bucks, I'm going to take 4,000 of it off. Maybe I'm going to leave on a few runners. If I had a 5,800 put on the S&Ps, I'm going to book it. Maybe take 10, 15, 20% of that profit and go buy a 5,700 put. I want to pay myself more and more the closer we get to what I think is an important level. They break it lower from here, call that a nice cherry on top. But a lot like, look at Apple on the weekly. And I think for a lot of folks out there, 250-ish was the big target coming out of that weekly chart. Breakout triggered the squeeze, 250, 254, 255-ish. Now you got to know at some point up here, whether it be 260, 263, you probably caught the easy part of that initial push. You're buying it back here, you cash out up here, rolled out some profit. On the pullback here, Apple can't hurt you. If you made 10,000 bucks on the push, you risk 2,000 of it. You're walking away down here with a net profit of 8,000 bucks. That is so much better than, man, if I can keep on my full size here and they take it a little bit higher for me, I'm going to make that much more. It's a lot of progress just down the drain there. And no TPS reports. I don't think Bitcoin looks very good at all here. I would agree with you on that one. So I'm going to keep the exit working at 89K there. I hate to think this way, but it might be a healthy, realistic way to look at trading. We are due for a loss. And I don't look at that in a negative light. Now I'm fearful that we're going to have a losing trade sometime soon. But more the more time you get under your belt working your system, you kind of know when losses are coming. So Bitcoin might be one for us here. Never makes it enjoyable, of course. But yeah, I don't love the entry for my trade here, to be honest with you. Which I don't like doing in my own account, but I especially don't like doing it in a group trade. But before I wrap it up here, let's have a little conversation about that. One pattern I've noticed in myself, and then I think a lot of us do this, probably unknowingly. Bitcoin wouldn't be my textbook, perfect daily squeeze entry. The entry was perfect, but not the signal. Right? No momentum, no white dot. Where TSM had it, OKLO had it. But more interestingly, more importantly, when did I open the Bitcoin trade? Well, just so happens I opened Bitcoin after we closed two profits in TSM and OKLO. And I'm curious if any of you have a similar pattern in your own trading. I'm prone to getting maybe a little bit loose with the discipline after closing a couple of winning trades. And Mark Douglas talks about this in Chapter 7 and Chapter 8. The odds of that Bitcoin trade working, even if it had the white arrow, perfect setup, all the above, the odds of that trade working or not working are no different because my last two trades were winners. Bitcoin's got no clue. And anybody buying or selling Bitcoin has no clue. All right, guys, Taylor Horton is getting along here, and he just closed two profits in a row. What happens in our head, again, unknowingly, is all right, I'm closing some profits, and I got a little euphoria going. All right, I took a good hit there of the dopamine joint, and now I want another hit. So after I close a couple of winning trades, I'm like, all right, now what are we buying next? My account is bigger. I got more cash to work with. Let me go buy something. Let me go do some slinging out here. And if after I close one profit, two profit, if I can look at another setup and yeah, it's got alignment, signals, all the above, take the trade. But again, because the last two worked, it doesn't change anything about trade number three. But what I find sometimes is, close a couple wins in a row, get a little bit too loose. Right, I'm on a good roll here. I want more of that dopamine hit. Let me go buy a swing trade on Bitcoin without my momentum signal. And every now and then the market reminds you, hey, you're not that good. Don't get cute. Follow your rules, be disciplined, one trade after the other. Now, if I close 3 losing trades in a row, trade number 4 has no idea, probabilities wise. So I put all the above in my journal. But yeah, I want to be a little bit more mindful of that. The easy solution is just before you pull the trigger, ask yourself that question. On my time frames of focus, do I have my A, B, C, D? If you don't, then you might be buying that for the wrong reason. If you do have A, B, C, D, then whether you're on a 10 trade winning streak or a 10 trade losing streak, got to pull the old trigger there. But all right, guys, I've been blabbing for a little bit too long this morning, so I got to cut you short here. My apologies for that. But yeah, thank you for your time as always. S&P's 5800, QQQ 500 shall be a spot for a fight. And then, yeah, we got the CPI report tomorrow, the PPI report the following day. A lot of things on the calendar here moving forward. My only goal for now is, it's a giant if, but if the weekly 21 EMA is support, I don't want to be short into the report tomorrow morning. And again, guys, this is all just conversation amongst friends. Just trying to get you thinking on a Monday morning. But I don't want to pile into shorts at support into a catalyst where if everything goes well and the CPI, PPI, anybody short could wake up to a big problem. Below 58 and no signs of getting back above it, then we'll be back here having different conversations. But best of luck, go get them, and I'll be back here same time, same channel on Wednesday morning. Adios, y'all.